Let's now take a look at the advisory to get across small and medium businesses and how they could rethink in financing assets in high cost environments. This is particularly as we head into the end of the financial year. At the same time, Reese Ketu is the Group Head of Sales and Distribution at Moneytech, joining us now. Reese, welcome to Ausby. It's good to have you on the show. So, you're talking about now's a great time ahead at the end of the financial year for businesses to act, particularly in terms of claiming tax benefits.
Absolutely. And yeah, thanks for having me. It is at the end of financial year is a critical time for businesses, giving a great opportunity to sit down and do their tax planning, whether that minimisation or maximisation of deductions, cash flow and finance readiness, and that strategic planning around, growth targets, adjusting budgets, and, with a whole raft of things. But really, when it comes down to it, it's a great point in time to really review those things and take a look at CapEx, working capital needs for the future.
All right, so what you're saying, particularly you can sort of focus on underperforming assets, equipment in particular, fleet expansion and improving productivity.
Yeah, spot on. And it's really about utilizing those assets to the best of their ability. So, one of the key, things to look at is what asset finance can potentially do for you in terms of preserving working capital by being able to spread over the cost of a new asset with fixed repayments over a longer period of time. Matching those repayments with cash flow is something that we see benefit businesses all the time, and funding equipment for growth. So the end of financial year is a great time to sit down and forecast what seasonal demands you might need, and then finding new equipment to be able to fund that growth.
All right. So, what do some of those businesses need to be aware of, particularly in terms of claiming the $20,000 instant asset write-off?
Yeah, I think it's really important that businesses have a tax professional in their corner, and potentially even a strong finance broker to help them support and navigate those the changes around those laws. So at the moment, with those tax changes and looking at what they're going to be investing in, those immediate deductions apply by June 30. So that might motivate a business to go out there and buy equipment pre-June 30, and that sort of motivation to go out and get new equipment, tools, and maybe invest in technology as well. So it's going to have an impact on cash flow, and there may be incentives to do that before June 30.
I see you also point out, with a focus, I guess, particularly on tradies, that construction and trade clients, they're facing a lot of pressure and have been certainly in the past, given cash flow constraints.
Yeah, spot on. And that's where those key decisions and having those key, a tax professional in your corner, a good finance broker, to really navigate those challenges around whether it be late payment terms or supply terms coming in where you need to make those payments a little bit earlier. It's really key that you're working closely with those trusted advisors to ensure that you do have a health check done on your finances and your cash flow, and getting finance approved, pre-approved and ready.
And Reese, obviously, when you're talking about tradies and in that construction sector, one of the biggest costs, of course, is labour, skilled labour. What sort of strategies do businesses need to employ?
Yeah, when it comes to skilled labour, again, it comes down to being prepared and understanding exactly where the business is going to go. We're certainly seeing in our customer base around tighter supply payments and customers paying longer. That having good staff and sourcing good staff comes down to really around planning and investing correctly into the business.
All right. So you also talk about perhaps encouraging business owners to, in terms of their finance structures, just assess whether they're essentially still fit for purpose.
Correct.
All right. And you also talk potentially about bundling assets and and working capital finance to increase flexibility. What do you mean by that?
Yeah, so it's around using the right types of financing structures as well to finance a business. So, as I said earlier, around purchasing assets, what we commonly see is businesses potentially using cash flow or cash out of the business, and/or overdrafts or lines of credit to purchase key pieces of equipment they might need for that construction business. It might be some yellow goods equipment to take on a new contract. So it's really about being having an understanding of how the products work. So again, having a good, strong finance broker to support, and working with your lender or your banker to understand how those products will work, spreading the cost of those assets over a longer period of time, and retaining cash for wages. And as you said earlier, the labour side of things, purchasing stock, and avoid drawing down on those working capital lines. So it's really key to ensure that those products work for the business and match repayments to the cash flow. So something like an asset finance or equipment finance facility to purchase a piece of equipment with potentially structured repayments that align with the cash flow, and balloon structures as well. So it's just really key to understand how those products can work, and having those trusted advisors around you to help you make those right decisions.